you all for being here. Welcome to today's session. My name is Patrick France, Senior Instructor here at VectorVest. And today we've got a special presentation talking about how good things go when they come in pairs. So this concept here is specifically just for our mobile subscription, our VectorVest stock advisory app, and started because of your guys' feedback here on Facebook Live. So it's going to be an awesome presentation. Thank you all for being here. Appreciate the patience here from you guys. So with that, let's go ahead, jump right into it. For anybody new just tuning in for the very first time, what we like to do here is every Thursday we go live on Facebook here where we talk about the VectorVest stock advisory app. If you're not familiar with it or if you're new to it, it's the mobile app that helps you manage your portfolio and also helps you time your trades and also helps you find what trades to be getting into at any given time. Essentially, it's the most comprehensive mobile app out there for any investor or trader. And if you don't already have it, make sure to click on the link in the pinned comments. You can download it, give it 2 weeks for free, try it out for yourself, and see how powerful it really is. So, if you're new here, if you're just tuning in, let me know where you're tuning in from. Say hi in the comments section. This is a very interactive live stream here that we do every Thursday. So let me know, say hi, let me know where you're tuning in from, because we've got a lot going on here today. So it's going to be a good session. Hopefully you guys are excited as I am. Welcome. Appreciate that, Ricardo. Glad you could be here today. Also, hey there, Bobby. Hey there, Emily. Hopefully you all are doing well. Thank you all for being here today. What we're going to be talking about, or the flow that we typically go over here, is we start talking about, what's going on in the market today. Then we'll dive into our topic. So we're going to be talking about the different pairs, ETF pairs more specifically, that we have in the mobile app ready for you to use. So that way you can make your investing easier, whether you're, just wanting to play up and down movements and short-term volatility like we've seen recently, or if you're looking just for a hedge, if you bought stocks long and you're worried about these short-term pullbacks, you want to pick up a hedge, you can also use these ideas as well for that too. So got a lot of people starting to tune in now. Hello there, Raj, Helen, Seth, Rebecca, Rich, glad you could be here today. Heather, Danny, welcome. Ricardo's tuning in from San Antonio. Gorgeous area. I love San Antonio. Hopefully you all are doing well. Hopefully you guys all had a great long weekend as well. Happy holidays or happy Easter to everybody. Or I guess belated happy Easter to everybody since we didn't get to see you guys during that holiday period. But welcome. Hopefully you all are well rested, ready to go for today's session. Good morning, Jansen, Bruce. Hello. Hello, Joe. Tuning in from Darlington, PA. Awesome. Glad to have you all here. All right. So let's go ahead and start taking a look at what's going on today. And then we'll start to dive into our topic. And as always, if you want your own stocks analyzed, we love to finish off the sessions with our fan favorite, where we'll show you how to analyze any of your own stocks in less than 20 seconds. So if you're not already a subscriber, want to see how easy it can be to analyze your own stocks, make sure to stick around towards the end. Hey there, George, tuning in from London. Awesome. Glad to have you all here. All right, so as we can see, looking at the market right now, we're 3 ticks into the yellow, the market is neutral, and we still advocate caution when buying stocks at this time. If we scroll down, as always, we give you the market guidance videos where we recap what's going on in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, just simply watching these 5-minute long videos will make sure you never get caught off guard by anything going on in the market. This is also where you get that special guidance that we give, where we gave our subscribers a notice back in January, all throughout February, of a potential downturn coming into the market and to be cautious. So this is where you get that extra guidance to make sure that you stay on the right side of things and stay protected, and also know when to start getting back in as well when the market starts bottoming out. Jay, glad to have you here. Welcome, welcome. All right. But then we scroll down a little bit further and we get to the color guard. Now the color guard is really analyzing the trend of the market using our key indicators that we use here at VectorVest. First off, we look at price movement because, you always need to know what the market is doing and whether it's moving up, down, sideways, if it's higher week over week, if it's lower week over week. So analyzing price movement can really give us a lot of insight into what's going on. The next one is the RT, which stands for relative timing. Now this is going to be cast on the scale of 0 to 2, and this shows the short-term trend of the market. So above 1 shows the short-term trend is up, below 1 short-term trend is down. As we can see, the RT is currently at 0.76, telling us that the short-term trend of the market is still down. So even with this bounce off of these lows that we've seen, the short-term trend is still moving lower right now. Then we look at the BSR, the buy to sell ratio. Now here at VectorVest, we give a buy, hold, and sell rating on every single stock every single day. Now these aren't, some analysts in the background saying, oh, I like that stock, I don't like that stock. These are based upon strict rules that we follow here. So that way you're comparing apples to apples rather than apples to oranges. And when we look at the buy to sell ratio, it shows the health of the market. If there's more buy rated stocks in the database to sells, then obviously that shows strength to the overall market. If there's more sells than buys, that shows weakness. Right now, being at 0.09, that shows that there's more sells than buys right now. So therefore, that shows overall weakness in the market. Then we look at our MTI, the market timing indicator. This is looking at the underlying trend of the market, once again, cast on a scale of 0 to 2. So above 1, the underlying trend is up. Below 1, underlying trend is down. At 0.84, that tells us the underlying trend of the market still remains down. We can see just a few days ago, it tried to get all the way back up to that up signal, but failed to hold those levels and now starting to pull back a little bit, giving us a little hesitation currently. Then we look at the trend column, where we show two parts of the trend each and every day. So the first part simply looking at the weekly trend of the market. And as we can see, it is up since we're higher than 5 trading days earlier. The second part, looking at the underlying trend, or that MTI again. Since the MTI is below 1, the underlying trend is down currently. And then we look at the calls column, which this is our most conservative signal. It stands for our confirmed calls, and it's our last line defense for all of our users here. Essentially, it's our last signal we'll give you to get into the market and our last signal we give you to get out. So therefore, you never want to ignore a confirmed call change. As we can see, our more conservative signal, our confirmed call signal, still remains in that down situation as of today. All right, seeing a lot of new people tuned in, so awesome. Hello, Barry, Scott, Naeem, Paul, welcome. Glad to have you all here. Thank you all for tuning in with us today. I see a lot of new faces also starting to tune in as well, so great. Thank you guys once again for being here. I see, just to clear the air, I had a family emergency come up right before we were getting ready to start that I had to get to. So I do apologize for the later delay, but glad you all are here, and thank you for tuning in here today with me. All right, so scrolling down a little bit more, looking at the advanced declines. Well, one thing that we always talk about here is we like to see twice as many stocks advancing than declining, or twice as many stocks declining than advancing, depending on which way the market is heading. So markets are up today roughly. So we'd like to see twice as many stocks advancing than declining, and we don't have that. So that tells us we do see some potential weakness right now, even though the major indices are higher for the most part. So telling us, once again, err on the side of caution. If you're trying to buy long today, be careful of that and keep an eye on that. Because then we scroll down, we look at the major indices. The Dow is basically break even. The Nasdaq's being one of the better performers here today, up just shy of 2%. S&P's just a little over 0.8%. VectorVest Composite up about a third. So as we look at this, we use the Dow, the Nasdaq, the S&P. Those are things you can find anywhere else. The VectorVest Composite, though, gives us a better representation on what's really going on in the market, since it's looking at about 8,100 stocks rather than just the Dow's 30 or the Nasdaq's 100 or the S&P's 500. So looking at the VectorVest Composite can really give us a true sense of what's going on in the market. So as we can see, up about 0.33%, telling us that, the markets may not be as strong as, if you looked at just the NASDAQ, for instance, may not be as strong as we think they are right now, which kind of goes with what we've been talking about here over the last few minutes. When we looked at, the color guard, we looked at the MTI, the RT, the BSR, all of that kind of confirms what we're seeing here with what the price action is doing here today. Hey, Steve, thank you. Appreciate that. All right. So with that, let's go ahead, jump into today's topic. Now, this is something unique with the stock advisory app you're not going to find in the desktop. This was something that was started and something that came from a concept our Facebook Live followers actually brought up and wanted to see. So we've got it implemented in here, got it set up for you guys, and it's kind of a hidden gem, if you will, in the stock advisory app. So what we're going to do is we're going to go to the more option at the bottom and take a look at the market watch list. The market watch list are something where you can get, the stocks in a Dow, the NASDAQ 100, the Russell 2000, S&P. But then one of the unique features is our ETF pairs. So, it's a great tool to have if you want to find stocks that are going up or going down. If you want to just play broad market moves, you can use ETF pairs to help you do that rather than trying to, track down one stock or, as the best stock out there. If you just want to play the broad moves, ETFs are a great way to take advantage of that. But another benefit with ETF pairs is that, let's say the market does start pulling back a little bit. We have a little bit of weakness, especially coming into earnings season. Well, if you need a hedge or if you want to change your position, take advantage of that pullback for the short-term volatility, you can easily do so. So right now we look at both ETF bears and bullish right here. And as we can see, the ETF pairs bullish is definitely taking the lead. So we're going to go ahead, click on that. And this list will have a lot of different areas of the market. As you can see, we have gold, the NASDAQ, biotechs, China, silver, the S&P, semiconductors, Dow, nugget, natural gas, financials, oil. So a lot of different areas of the market that are, more of the attractive areas, more of the commonly traded areas. So these can allow you to take advantage of not just, the broad market moves, but specific moves as well in certain major areas of the market, certain major industries, if you will. And the great thing about this, is if you want to switch it, you have the opposite one that will move inversely to whatever bullish one you go to from the bearish watch list, which we'll take a look at in a minute. Now, a lot of these, just want to throw that out there, are triple leveraged. If you're not familiar with ETFs, what that means is, ETFs come non-leveraged and then leveraged. And leverage means, let's say, we'll take the S&P for example. If the S&P goes up 1%, non-leveraged moves 1% as well. If it's leveraged, that means as the S&P moves up 1%, a leverage ETF is going to move up 2 to 3 times that. So if it moves up 1%, it could move up 2% or 3%. Now, on the inverse, we'll talk about it when we get into the bearish watch list as well. But same thing goes with the inverse. You have leverage and non-leverage. So if you're new to ETFs or if you're more of a conservative investor, I recommend starting to take a look at non-leverage ETFs. Those are going to be your more conservative, not move nearly as fast, and give you a little bit more wiggle room to get in and out without having to necessarily nail the exact top or bottom. But if you're more aggressive, if you're more of a technical trader, a short-term aggressive trader, triple leverage ETFs can be a great tool to take advantage of. So here we can take a look. Gold's been on a huge run as of late. We take a look at this one. As always, when looking at ETFs, the primary thing we want to focus on is the RT. As we've talked about many a times here, the RT for ETFs is the number one indicator to look at. Because ETFs don't report earnings every quarter just like a normal stock does. So therefore, the fundamental indicators, the RV and the RS, are always going to be pegged at 1. So when you're looking at an ETF, you just need to know, is it making money or is it not making money right now? And that's what the RT tells you. For looking at the gold ETF, 1.71 tells us it's in a really strong uptrend. Therefore, it's making us money. If we go take a look at the graph real quick. Just go ahead and switch it here. As you can see, I have some of the indicators that we've been talking about on the graph that we've been talking about over the last few weeks. You can see I have support resistance right now. And look at that, folks. You have a nice breakout. You have this strong level of resistance right here. Let's see where that is. Right around 185. Well, it gapped up, broke out, followed through, pulling back a little bit, but still remains above that support line, or now support line. this could be a great opportunity. If you're focusing on gold, or if you're focusing on that gold move, want to take advantage of it, keep an eye on the support resistance. If it pulls back, retraces, and retests that support line, that could be a good entry point to get a nice bounce off of there and capture some really great gains. So just kind of combining what we've been talking about over the last few weeks all into one. You know, investing is very comprehensive. There's a lot of different aspects to it. And that's the great thing about these Facebook Live sessions is that, you know, everything can relate to one another and combine with one another to enhance your learning and enhance your experience and enhance your knowledge on how to trade and how to make money in the market. So, as you can see, putting it together, if it pulls back to that support line, could be a great buying opportunity to capture a second run in it. Right now it is pulling back a little bit, so you may want to just be careful if you're not already into it, but definitely one to keep an eye on and pay attention to. Let's go take a look at some more. We'll go down, see the second one, TQQQ. As we talked about just a little bit ago, the Nasdaq's been one of the best performers off of this bottom. You know, we've seen huge explosive moves to the upside in the Nasdaq. When the market does pull back on pullback days, the Nasdaq's rarely the worst performer. It's usually one of the best performers at that point. So Nasdaq could be pretty strong, a good one to look at. Now, once again, this is triple leverage, so keep that in mind. It's not for the faint of heart. If the Nasdaq goes up 1%, this is going to move up 3%. As you can see, it's up 6%. Nasdaq's up about 2% right now. So if we go take a look at TQQQ, as you can see, starting to move up nicely. You have higher lows and higher, there we go. There we go. Now you can see it a lot better here. You have higher lows, higher highs, a nice steady uptrend forming off this bottom. You're coming up to resistance right about that $79 range, so maybe careful of that, but still, that's about $15 away from where we're currently at. So not a bad profit potential looking at support resistance and utilizing that to the fullest potential. At the bottom, you can see I have the DPO showing short-term momentum as an indicator, and you can see it's just starting to cross above zero, showing short-term momentum starting to favor the upside again. So another sign of strength here. Patrick's asking about SQQQ. Patrick, that's actually the next part we're going to take a look at. Right now, we're just looking at the bullish side, and then we're going to go take a look at their pairs on the bearish side. So that way you guys can be prepared, have your one-stop shop essentially for your ETF pairs if you, if that's what you're looking for here. So once again, combining what we've been talking about the last few weeks from a technical standpoint on these triple leverage ETFs, you want to be more technically driven. You do have some great money making opportunities here. And obviously, with any watch list that we have here, we'll automatically bring the best ones to the top and the worst ones to the bottom. You can see this portfolio, this watch list is automatically sorted by RT. So that way the strongest RT will be at the top and the worst RT at the bottom. So therefore, you don't have to spend, hours upon hours or even, 30, 40 minutes trying to find which one's the best, because we'll do all that work for you right here with a simple click of your screen here. So that's the bull side. Let's go ahead, take a look at the bearish side. Now, every single one that we looked at from the bullish side, you'll find its opposite here in the bearish side. Also, if you guys have any, ETF pairs that you want to take a look at, whether they be single, double, or triple, or that you want to see in this list, let me know in the comments as well. This is an interactive watch list that started from you guys. So if you guys want to see new additions into this and you have both the bullish and bearish symbols, put them in the comments. Let me know. We can get those added here as well. So looking at the bearish side here, going to be essentially a 180 of what we were seeing on the other one. So you have natural gas bearish ETF being the number one with the highest RT. If we scroll down to the bottom, we can see the gold miners bear is the worst performer right now. Has the RT of 0.01. Semiconductors 0.07. Biotechs 0.11. SQQQ 0.13. Oil bearish ETF 0.15. Silver, Dow, S&P, the financials, gold, China, natural gas. So a lot of different opportunities here for you guys to make money. So these are a great way. Once again, if you're just tuning in, these are a great way to play markets both up and down very easily, very quickly, and not have to figure out, which one's making money now, which one should I be in, which one should I not be in. Or these can also act as a hedge. If you've been buying on those green lights, as we've been talking about, that green light buying timing system, which we've been looking at week in, week out, where we've had those few green lights as of late. If you've been slowly trickling in, but worried that, we may see a double dip in the market, or this volatility, especially with earnings going on, may see the market pull back a little bit more before we start continuing to move higher, you can take these ETF pairs and take these bearish ETFs and use that as a hedge to offset some of your long positions. It's another great trading mechanism or great trading tool for your arsenal of trading. It's not, the best way to describe ETFs, or especially bearish ETFs, is they're not an investment. They're more of a tool for your investments. So treat them as such. Hopefully that those are some good words of wisdom. Also, if you haven't already hit that like button, we've got over 200 people here today. If you haven't already hit that like button, make sure to do so. Make sure to hit that share button if you guys been enjoying yourself. If you found today's session informative, don't forget to hit the share button as well. But yeah, so, I see Norman, or who was that? Amar is asking about FNGU. And we can definitely take a look at some of those here in a little bit. As always, we save the best for last. We analyze your stocks and show you how you can do so in less than 20 seconds. So if you have stocks that you want to take a look at, just stick around. We'll make sure to look at those here in just a few. All right, so looking at the natural gas ETF, as you can see, looking at the RT, which as we've talked about is the most important indicator to focus on, 1.41, still in an uptrend. If we take a look at the graph real quick, just zoom in, you can see a lot of volatility with this stock. Obviously, not for the faint of heart, as you can probably tell just by looking at this graph right now. You see a lot of movements up and down, big movements up and down as well. It's gone from 400 all the way down to 200 in 3 days, and now back up to roughly 326. So big movements in very short periods of time. A stock like this or an ETF like this can be great if you're a day trader, because look at how big of movements you can make off of a single day. They can also be good for short-term swing traders or technical traders. Is pairs only on the phone? Yes, Mark. This is something that was started by this group here on Facebook, and something unique to the stock advisory app for our users on Facebook and for all mobile users as well. If you have the desktop, you can get the mobile app, or you can get the access to the mobile app included in that. So everybody has access to this. Amin is asking, how can I set up my graph like that? Perfect question. And this is actually a question that a lot of people had a few weeks ago, wanting to see the DEW timing system in the mobile. We get lots of emails about this. Our support gets lots of calls about that. And so I did want to show this with you guys as a little sneak peek, or a little trick, if you will. We go to the main menu, or we go to the search screen, type in the VectorVest composite, tap on the graph, go to the graph settings at the bottom. There we go. I have it set for daily, candlesticks, moving averages. I have it set for a weighted 30-period moving average. So that's what's used in the DEW that you guys see in that weekly special presentation on the nightly ones as well. I have the envelopes just set to the default there. And I have support resistance. I'm going to take that off for now. And then on the bottom, I have a 20-period DPO setup. These are the settings that we use for that DEW timing system on the VectorVest composite. So I go back to the lower graph section, go back, zoom in. And as you can see, now we have the DEW timing system on the mobile app. So also, Min, that just shows you how you can set your graphs up like that as well. But hopefully this helps you out. I know a lot of people were questioning about it, or had questions about it and how to use it, and how to, can you see the DEW on the mobile? And the answer is yes. This is how you would do it. You would just have to set up your parameters there. Tommy's asking, do you have paper trading simulation? I would like to practice trades first. Yeah. Everything in VectorVest is paper trading unless you link it with one of our sponsored brokers. And then you can send those trades directly to those brokers. But if you're just building a portfolio and don't have it linked or don't, specifically send it to your partnered broker, then you're only paper trading. So keep that in mind. VectorVest is a great tool. We always recommend, test your ideas out first before you start putting money into it. You want to have that confidence in your trading system before you put your hard-earned money into it. All right, so with that, let's go ahead. Start to analyze people's stocks. So if you have stocks you want to take a look at, go ahead. Start putting them in the comments now. Also, as a side note, if you haven't already hit that like button, do so now. All that helps me out. And if you have other pairs that we don't have currently in these ETF pairs watch lists, let me know the pairs, whether they're single, double, or triple ETFs. Let me know the symbol of the pairs, and I can get these added for you guys as well. All right. So first stock you guys wanted to take a look at, DAL, Delta Airlines. Let's go take a look. Delta Airlines, great long-term potential, about average great long-term potential, about average risk associated with it, a little bit less than average. Timing though, not quite there. Current situation, these stocks have been hit pretty hard. Timing is still really beaten down. Overall, the stock's about average right now. Let's see, UBT. So another ETF, looking at the 20-year treasury, I believe. Therefore, with an ETF, your primary focus is RT 1.57. Nice strong uptrend. Overall, definitely favorable. FNGU. Another ETF, 0.78. Even looking at that mini graph, you can see a nice bounce off of that bottom. With the RT of 0.78, still shows the short-term trend is down. Even with that recovery, not enough to give us an uptrend on the ETF yet. Let's see, Netflix. Let's go take a look. NFLX. Looking at Netflix. So we'll break it down with these indicators as well. All four of these are cast on a scale of 0 to 2. So above 1, good, below 1, bad. As long as you can remember that, VectorVest is going to make your investing career, investing life a lot simpler. So RV is looking at the long-term potential over the next 1 to 3 years. 0.98, a little bit below average, so therefore poor long-term potential over the next 1 to 3 years. Or slightly underperform, if you want to think about it another way, slightly underperforming a AAA corporate bond over the next 1 to 3 years. Then we take a look at the RS, which is looking at the consistency and the predictability of the company's financial performance. So is the company growing their earnings quarter over quarter, year over year? At 1.19, tells us, yeah, they have consistent fundamentals right now, the consistent earnings reports. Another way of looking at RS is it's a risk factor. If it's above 1, shows less risk in the stock. Below 1, more risk in the stock. Then we focus on the RT, short-term price trend. 1.74 shows us this stock is exploding right now. So overall, this stock's favorable. All right, let's take a look. What's the next one we got on the list? AMD. Looking at AMD, you have good long-term potential, good fundamentals, really strong uptrend. Overall, the stock's favorable. Let's see, MFA, mortgage company. All right. So looking at MFA, you have great long-term potential, but a lot of risk to get to that potential. Timing is basically free falling, so therefore the stock is not favorable right now. Regardless of whether you're looking at a conservative stock, an aggressive stock, a speculative stock, whatever it may be, you always want to keep an eye on timing. Timing is going to be key no matter who you are and what style of investor you are. All right, Apple being the next one. Great long-term potential, great fundamentals, nice steady uptrend. So yeah, overall this stock's definitely favorable. TCL ETF. All right, so a tech ETF. TECL, looking at the timing, 0.4, below 1, overall, not favorable. And then stocks long. So very similar to what we were seeing with the other one, 0.34 in the RT, therefore not favorable yet still. Both looking at pretty much semiconductors there. Do you have, okay, INSG. Oh, G, there we go. Looking at INSG, this is more of a speculative trade. Poor long-term potential, a lot of risk associated with it, but timing pegged it to a great trader stock, a high momentum stock, not for the faint of heart. Make your money, take your profits, be done. All right, NNDM. NNDM, good long-term potential, a lot of risk associated with this stock. It's free falling. It's in a pretty substantial downtrend right now. 0.5. Overall, the stock is not favorable right now. Need to see that timing pick up a little bit more. TTDWO. Good long-term potential. Good fundamentals. Nice steady uptrend. Overall, stock's definitely favorable. GE. GE, poor long-term potential, a lot of risk. It's in a steady decline, so therefore the stock is still not favorable right now. That one gets asked about a lot, and until something major changes with that one, still gonna have poor analysis on it, if you will. All right, looking at Abbott Labs, good long-term potential, pretty decent fundamentals, really strong uptrend. So yeah, definitely favorable right now. PTE. Or pets, excuse me. There we go. So pets, poor long-term potential, about average risk associated with it, but it's in a really nice strong uptrend. So yeah, stock's favorable right now because of that momentum. TSLA. Oh. Looking at Tesla, a little bit less than average long-term potential, but great fundamentals, really strong uptrend, hot stock. So yeah, definitely favorable currently. Netflix, I believe maybe we looked at this one, but a little bit less than average long-term potential, good fundamentals, strong uptrend, definitely favorable. Disney, DIS. Disney, poor long-term potential, but good fundamentals or good consistent earnings. Unfortunately, just the timing is not quite there. A good conservative stock, just need to see the timing pick back up a little bit. FNGU. Tommy, we did a session a couple of weeks ago or a few weeks ago, maybe a month or so ago, about the portfolio section and how to use that for paper trading. So if you want to go see that in action, just go back to some of our live streams there. You can go back and watch all of them. But there is one on paper trading using the portfolio section there. All right, FNGU. Wait, we looked at FNGU. GLOP. There we go. Great long-term potential, but a lot of risk. Falling like a rock, so therefore not favorable right now. EPD. EPT or EPD. Good long-term potential. A little bit more risk than average. Timing is just not quite there, so therefore stock's not favorable currently. HELE. HELE, great long-term potential, less risk associated with this stock. Timing, not there. So timing is everything when trying to get into a stock. You need to see that timing pick back up before we really would actually add it to our portfolio. Definitely a great fundamentally sound company that we should definitely keep on our radar. Just not the time to be into it right now. MRCY. And if you're liking your analysis, if I analyze your stock and you agree with it or you don't agree with it, let me know. Leave me a like on that or at the bottom of the page here. Let me know if you guys agree with the analysis or what your guys' thoughts are. MRCY. So about average long-term potential over the next 1 to 3 years. Pretty solid fundamentals at 1.17. Nice steady uptrend. So yeah, stock's favorable currently. RTX. Let's go take a look. So RTX, great long-term potential. A little bit of risk associated with it though. Timing's not quite there yet either. So therefore the stock is not favorable at the moment. Walmart, WMT. Walmart. Poor long-term potential over the next 1 to 3 years. Pretty consistent fundamentals. Nice strong uptrend. Overall, stock's favorable. Let's see, JCP. I can tell you already it's not going to be pretty, but hey, we'll take a look. Decent long-term potential, but a lot of risk to get to that point. Timing not there at all. 0.07 falling like a rock, so therefore definitely not favorable. Stays hello from Perth, Australia. Thank you. Welcome. Glad you could be here today with us. Thank you for joining us. Jamar wants to take a look at WM. Waste management, excuse me. About a little less than average long-term potential. Decent fundamentals, about average. Timing's not there at all, so therefore the stock's not favorable. XAN. Great long-term potential, but a lot of risk to get to that potential. Timing dropping like a rock. Therefore, stock's about average, but you really need to see the timing pick back up before you'd ever consider that one. Amazon, hey, let's take a look at that one. That was actually my pick from our hot stock panel we did last week, I believe it was. So let's see how my pick's doing, up 4.5% today. Yes. But Amazon, poor long-term potential over the next 1 to 3 years, but you have great fundamentals, really strong uptrend. Overall, this stock's definitely favorable. Take a look at the graph. I just want to see. So last Wednesday was our session. What date was that? The 8th. Let's go ahead and put it on the 8th. I recommended it on the 8th at 2,000. Now it's trading at 24. I'll take that. I'll say that was a decent hot stock pick idea. Hopefully you guys were tuning in for that, and hopefully some of you guys made money on that one. All right. Let's see. Look at that. Got to get caught up. AMAT, we can definitely take a look at. AMAT, about average long-term potential, good fundamentals, steady uptrend. Overall, stock's favorable. TWTR. Twitter, poor long-term potential, a lot of risk, steady decline. Overall, stock's not favorable. NGD. NGD. There we go. New Gold. Good long-term potential. A lot of risk associated with this stock, though. It's in a steady uptrend, so overall, stock's favorable currently. Let's see. DRD. Poor long-term potential. Some risk associated with it, but it's a momentum play right now, folks. 1.94 shows some really strong momentum, therefore favorable only for the technical trader or short-term momentum trader here. All right, let's see. If all the indicators are above 1, is it a good time to invest? So, not necessarily. That's why we always start off taking a look at market timing. Market timing trumps any individual rating on a stock. If the overall market timing tells us that it's not time to be buying, the odds are, even if that stock is going up for the day, the odds that it's going to continue to go against the trend are slim to none. Everything that we do here at VectorVest is based upon probabilities and putting the numbers in your favor. So if we say, it's a good time to be buying, and you find a stock that has all the numbers above 1, yeah, that's a good one to buy. But if the markets are falling and you see the stock has all the numbers above 1, still, market timing trumps the individual rating. Therefore, you probably hold off on it. Maybe keep it in a watch list, keep an eye on it, but the odds that it's going to continue to go against the overall market are slim to none. As the old saying goes, all boats rise with the tide and all boats fall with the tide. So just keep that in mind in your investing. And that's why we talk about it day in and day out. Market timing is the most important factor that any investor needs to be aware of when managing their portfolio. All right. So hopefully that answers your question there. ARKW. Looks like an ETF. So therefore, looking at the timing, 1.42, definitely favorable. So overall, good time to buy. A good time to be in it. VPS. I think you're meaning VIPS most likely. So VIPS. If I'm wrong, just let me know. Good long-term potential, good fundamentals, hot uptrend right now. So yeah, definitely favorable. SSL. SSL, great long-term potential, a lot of risk associated with it though. Timing at 0.04 tells us right now is definitely not the time to be in this one. Therefore, the stock's about average right now, but timing is key. $50 G, 5 years out, new CEO, awesome. Hopefully that's what, but Alex, you're saying expecting G to be at $50 5 years out. That's speculating. That is purely speculating at its finest right now. And that's why it goes right along with what our analysis is saying. Poor long-term potential, a lot of risk based on their current fundamentals, keyword current fundamentals, and therefore it's a speculative trade. Russ, I do apologize for that. With all that's been going on with the pandemic stuff that's been going on, we've seen extremely high volume coming in to our support. We are working on trying to improve on that. I do apologize for that, but the best we could ask is just, simply be patient. We are trying to get to everybody. So, we're trying our best to handle the increased volume with everybody being home. Everybody has questions. Everybody, wants answers. So, I do apologize for it, but our support is doing a great job trying to handle it right now. Let's see, ISRG. That's a name I haven't seen in a long time. Let's go take a look. Intuitive Surgical, about average long-term potential, good solid fundamentals. It's in a steady uptrend. So yeah, overall stock's favorable right now. SQ, a speculative trade right now. Poor long-term potential, a lot of risk associated with it. It's not really in an uptrend yet. Overall, stock's not favorable. AC, let's take a look. Poor long-term potential, a lot of risk associated with it. It's in a steady decline. Therefore, stock's not favorable. TNDM. Another speculative trade. Poor long-term potential, a lot of risk associated with it. Timing's starting to pick up a little bit. So therefore, stock's not favorable, but timing tells us that if you're a momentum trader, you definitely have some opportunity with this one. Thanks, Paul. I'm glad you're enjoying today's session. Hey, make sure to stick around every single week, every Thursday. We're here going over, something new in the mobile app here, and also something new to help improve your own investing. All right, let's see. Now, NOW, but average long-term potential, good solid fundamentals, timing, it's about flat right now on a short-term basis. Therefore, the stock's favorable, but one of the tips and tricks we like to talk about here on our Facebook Live sessions is looking at that RT. Typically, we prefer to see that RT going above 1.1 or higher. In between that 1.0 range to 1.1 range, stock can really be just treading water essentially and not really having that momentum you like to see in your portfolio. All right. ODP, good long-term potential, but a lot of risk from their fundamentals. Timing isn't there, so therefore the stock's not favorable right now. see, HIIQ. HIIQ. I'll look at this and Paul answer your question for you. Not finding HIIQ. All right, so let's go ahead and answer that question. He says, if a stock is fully valued, why would you buy versus an undervalued stock? So we talked about this, I believe it was last week. Even though a stock is overvalued, doesn't mean it can't make you money. If a stock is overvalued, that means you're paying a premium on that stock at that time. People pay premiums for things to have exclusive rights to it. You know, look at a Ferrari, for example. They put a price tag of $250,000 on that car roughly. Does that mean it really costs $250,000 to make that car? No. People are willing to pay that premium to be able to say they own a Ferrari. Same thing happens here with stocks. You know, an overvalued stock means you're paying a premium. In an up market, that can still go higher. You can still make money in it. Look at Amazon. But when the market starts to sell off, we have noticed over our 30 plus years of being around as a company that stocks that are overvalued tend to sell off harder and faster than stocks that are undervalued, because nobody wants to be left holding the bag on a stock they know they were paying a premium for. So keep that in mind when looking at it. You know, it's more of a cautionary sign or more of a warning sign, something to be aware of, but shouldn't be a, deciding factor, because overvalued stocks can still make money. Undervalued stocks can still go down, but history shows us that overvalued stocks sell off quicker and faster, and undervalued stocks have more upside potential typically. So, just because a stock is overvalued, if you're an aggressive trader, you're not worried about it being overvalued because you're not going to be into it long enough to potentially sit through that pullback, or the second that stock starts pulling back, you're going to be out of it regardless because you made your profit. So if you're a long-term investor, somebody, looking to buy and hold for, a year, 2 years, 3 years, 5 years, whatever it may be, then yeah, definitely you want to favor undervalued stocks. But just because a stock is overvalued doesn't mean it's a deal breaker, if you will. So hopefully that answers your question, Paul. But great question. I like answering that. We get that quite a lot. So thank you for that. Let's see. Patrick, you're going to have to tune into the hot stock panel. We do that once a month over on our YouTube page. Glenn is the host. But if you want some hot stock ideas, make sure to stick around for those hot stock panels that we do every month. Let's see. We did TTWO. Let's go take a look at Visa. So V. Looking at Visa, great long-term potential, great fundamentals. Timing's not quite there yet. So overall, the stock's favorable because of the fundamentals, but we do need to see those technicals or the price actions start to pick up a little bit before we'd add it to our portfolio. Plug, let's go take a look. PLUG. Poor long-term potential, a lot of risk associated with it, but does have some momentum behind it. So a momentum trader stock, but a fundamental trader, definitely not. TD Bank. I think that's, let's see. TD. Good long-term potential, about average risk associated with it, maybe a little bit more than average risk associated with the stock. Timing's not there, so overall stock's not favorable. All right, we'll answer a couple more, and then we'll go ahead and start to wrap things up for today. And if I didn't get you your stock, if you're already a subscriber, just pull up the mobile app, click on the magnifying glass in the upper right, type in your stock, and you can do this same analysis on any single stock out there. If you're not already a subscriber, click on the link in the pinned comments, download the free trial. It's 2 weeks for free, risk-free. If you want to continue with it, you can. But there you can put it to the test. As I always say, seeing is believing. So putting it to the test, you'll see how powerful this can be, how much information you can get right at the palm of your hands to make you a more successful investor. And that's our goal here. Also with that, you can tune in every single week and join in on our Facebook Live sessions and gain even more knowledge to become a better investor. So let's go take a look at a few more here. FIZZ, National Beverage, poor long-term potential, a little bit more risk associated with it, but you do have some strong momentum behind it currently. So overall, it's favorable. Let's see, MSFT. I'm glad to hear it, James. Welcome, by the way. Glad you could join us here today. Keep It Simple on April 9th was awesome. Glad you liked that, Michael. So looking at Microsoft here, you have good long-term potential, great fundamentals, nice strong uptrend. Overall, stocks definitely favorable. What's best 5G? Well, Darby, you can pull it up in the app, take a look. We do have a special 5G watch list with all the major companies that are in that 5G realm, and we'll automatically sort it for you to show you which stock is the best. BIIB. All right, Biogen, great long-term potential, solid fundamentals, nice strong uptrend, definitely a favorable stock right now. And we'll finish off with one more, AMED, for our guy Dennis here in Charlotte with us. AMED. Poor long-term potential, but pretty solid fundamentals, so more of a conservative stock. But look at that timing. 1.75 tells us it's in a really strong uptrend right now. So overall, the stock is definitely favorable. All right, looking at the homepage once again, we're starting to see the market selling off. We noticed that with the advanced declines well before that at the beginning of the session about an hour ago. So no surprise there. We're now mildly bearish in the market. We now have that red light once again in the RT. Primary wave still up, but definitely falling. Looking at the Dow's starting to fall hard. You see this with all the quick little mini graphs here. We had a nice steady rise for the majority of the time here today, but they're quickly reversing. So this is why we always pay attention to that advanced declines. We like to see a 2-to-1 bias. We didn't have that twice as many stocks advancing than declining at the time, telling us to be careful. Now look what's happening. We're now seeing the market selling off. So today's session is very, very, timely for what's going on. When we have these volatile moves, use those ETF pairs that we have automatically for you in the app to help keep you on the right side and help take advantage of these short-term moves. Also, once again, if there are any pairs that you want to see that aren't currently in those ETF pairs, let me know in the comments section. I can get those added for you. Whether they're single, double, or triple leverage, doesn't matter. If you have pairs that you want to see in the app that aren't already in those two lists, let me know in the comments and I can get those added for you. Once again, folks, thank you for being here. Thank you for being patient with me and tuning back in at the rescheduled time here today. But it's been my pleasure being with you here. Once again, my name is Patrick France, Senior Instructor here at VectorVest. Thank you all, and make sure to stick around next week as we kick off another Facebook Live session on Thursday. This time it will be at 11 a.m. Eastern. All right, bye for now, everybody. Have a great weekend. Be safe out there. See you later.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.